deliver the keynote address of this event.
What is the main culprit in 2024 behind the rising costs and the operational inefficiencies that places a burden on businesses, particularly our SMEs? The Insap, through a petition and various statements have highlighted that the inefficient tax structure, especially the sales and service tax (SST), poses several challenges to businesses. The SST has been identified as imposing a tax-on-tax effect, where business is taxed on inputs that have already been taxed, leading to a cascading and compounding impact that artificially inflates price for consumers. This in turn reduces consumer purchasing power and adversely affects businesses. Unlike the GST, the SST appear to lack features like adequate reimbursement for businesses and real-time electronic filing capabilities, which further complicates operational efficiency. To make matters worse, this year saw an increase in SST rates from 6% to 8% across various categories, alongside the introduction of new taxes such as a low-value goods tax with the potential high-value goods tax set to follow. This combination complicates compliance for businesses and reduces consumers' purchasing power, especially affecting the B40 group. Insap's findings indicate that despite projected collection of 200 to 300 million from the low-value goods tax, which is 10% on goods value of 500 ringgit or less imported into Malaysia, and 700 million ringgit from the potential high-value goods tax, total collections still far short of average GST revenues. If the GST had not been abolished, it would have collected 63.5 billion ringgit and double the projected SST collection of 35.8 billion ringgit in 2024, and an indication of the GST's broader and more efficient tax base compared to the current SST framework. I think it is about time for us to revisit GST and consider its pre-implementation. Ladies and gentlemen, this year also sees a bold move with the rationalisation of fuel subsidies. Subsidies for diesel were lifted for a large number of users early last month, and subsidies for RON95 petrol are expected to be lifted soon. A big surprise. The impact on the economy is anticipated to be significant due to larger consumer base relying on RON95. How will the rollout be managed? Will there be adequate assistance provided to deserving consumer groups when these subsidies are lifted? We hope the assistance will be tiered based on individual needs rather than a flat rate figure similar to the 200 ringgit Budi Madani rebate for eligible diesel users. Once the RON95 subsidy is lifted, we can expect spillover effects across various industries. Despite the assurances by the authority to limit or prevent price increases, it is economically inevitable that such spillovers will occur. This would further diminish consumer purchasing power and make affordability less achievable. While we understand that subsidies substantially burden government expenditure and rationalisation is necessary for efficient fiscal management, it's now the right time to implement fuel subsidy rationalisation given the rising trajectory of taxes, prices, and the overall cost of living in Malaysia.